Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I want to chat about how basically the US dollar is getting absolutely hammered at the moment. How, like I said, continuing on from this morning's program, how there is still a little bit of a lot of bulls in the market and some recent developments which has happened in the last half hour, which is causing a little bit of a sell-off in indices. And that's the question, whether or not this is going to be a short-term sell-off. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand for entering any trade. With that out of the way, let's get started. So yes, like I say, we are continuing to see an awful lot of dollar weakness against the majors. A lot of dollar weakness. We've been seeing this for a little while, for a good couple of trading sessions now. But obviously, what Powell said last night has spurred the market on even more. And like I said, we are seeing a lot of dollar weakness. And it's all down to the fact, and this is why I want to really ask the question, whether or not the market is entering into a dangerous zone where we are challenging the Fed. Because obviously, the way the market has taken what Jay Powell said last night, as he's changed his stance a little bit. He's gone a little bit too dovish. Though what he technically did say was, one, something which you already knew the market already priced in, the 50 basis point rate hike in December. So that's no big surprise. And secondly, again, he did remind the market, that one, they're going to increase interest rates higher to a higher level than they originally anticipated back in September. B, they're going to hold that interest rate at a high rate for a long time till they are confident that inflation is coming down. And C, okay, there's no hints whatsoever that they're going to do a pivot. Now, all this market excitement, all this market movement is all based on the fact that the Fed's going to be doing a pivot at some point next year. But he said, and he's underlined, like I said this morning, history says that loosening too soon is dangerous, and he's a history buff when it comes to economics. So anyway, for the time being, we've got the dollar weak against majority of the majors. The dollar has crashed to like a 3-month low against the Japanese yen. In fact, it fell to the lowest level since August the 23rd before recovering slightly. The British pound, my lord, we were talking about that. You know, there was chat about that going to parity only months ago. Now that's turned around. That's now trading at the highest level since August the 12th. The euro dollar is also trading around a 3-month low. Remember, it was below parity. So we've had a completely change in the mindset. It's an amazing turnaround. And like I say, we'll talk about, in the minute, if this is short term, are we challenging the Fed with this? So we'll talk about that. Obviously, indices. Now, indices is under pressure at the moment, and we'll go over the reasons what's just happened, why indices are under pressure. But the Dow 30, for example, people are asking, it's now entered into a bull market. Not when it's not a bear market rally we're looking at. We're now in a full swing bull market. And the reason why they said that is because the Dow 30 has actually risen by 20% from the lows it hit in September. And the theory is, if you get a 20% recovery from the lows, then you're entering a bull market. Like I said this morning, the S&P 500 has had 2 monthly gains, in a row. It's the first time it's had 2 monthly gains in a row for the first time this year. Okay. But however, like I said, we're going to look at the indices in a minute and we'll have a chat about them because they're under pressure at the moment. There's an old saying, of course, which is make hay while the sun shines, because currently, as the market stands, the indice has dropped it's become under pressure, for a drop in US factory orders, and obviously US manufacturing PMI came in worse than anticipated. In fact, US ISM manufacturing PMI was announced at 49 versus 49.8 expected. Don't forget, any number under 50 is not good. So even though it's coming worse. Now, Let's have a quick look at the indices, then we'll chat about it. What we think about this, and then we'll have a look. And the other thing about the indices as well, I want to say, even though it's been enjoying a good couple of trading sessions for a while, like I said, we have seen a recovery. Number of investment banks are saying for now, they still see a pretty poor quarter in 2023. Morgan Stanley predicts the S&P 500, for example, will fall to 3,000 points in the first quarter. JP Morgan reckons the S&P will trade between 3,600 to 3,300 points. But anyway, let's have a quick look at the market, see how it stands. Because like I say, because of that ISM manufacturing number, it was riding high. Okay, it has been riding a high for a long time. It is still trading around above the 4,000 points. Because the ISM manufacturing disappointed, though, in the short term, it has actually sort of like, came under pressure. It found a little bit of a support around that 100-day moving average, so that 50-day moving average of 4,049 points. If we look at on a daily, though, in an overall picture, okay, it's down slightly for the day. Still above that key 200-day moving average, though. Okay, so like I say, we've got a knee-jerk reaction based on that economic data. Okay, whether or not this is going to change the tide and whether the market's now going to start thinking recession concerns, not necessarily about the Fed, that is another question, whether the market changes its mindset. If we have a look at the Dow 30 as well, like I say, this is what I mean by the lows of September, 20% recovery. Yes, okay, since that ISM information on the day, it is down, but on the last two trading days, it has traded higher. It's currently trading, again, above the 200-day moving average, trading at 34,178 points. If you look at on a short term, you can see how that ISM has damaged it slightly, but for now, it's finding a bit of support on the short term, potentially around the 200-day moving average of 34,116 points. The NASDAQ is the same picture, same story as well. Obviously, it's found a bit of support around the 50-day moving average, currently trading at 11,964 points. Today challenged that key area we've been watching until the ISM came out, that 12,025 points. And like I say, it's managed to find a bit of a recovery now because in general, like I say, the market is looking towards that pivot expectation because of what Powell said. Other inflation news. Don't forget we had inflation news today as well. We had the core PCE price index. Month on month came in lower than expected. It came in at 0.2% versus 0.3%. Which is good, which means inflation is coming down. And year on year came in as expected at 5%. Previous reading was 5.2. So we got a slower down on this. So this is also what's hurting the dollar a little bit. Let's have a quick look at the currencies because I want to look at the currencies because it's been a complete turnaround for a number of these pairs. Let's start off with the euro. Euro, okay, like I say, it's had a bit of a sell-off, but it was over the 1.05 handle. That's 3 months performance, best performance in 3 months. Okay, it's above that key area now as well, 1.03882, which was the 200-day moving average, which was hovering around for quite a while. It's above that now. It's currently challenging again the 1.05. Now, remember, we're in parity back in September. Look at the turnaround. Look at the dollar weakness. It's just under that 1.05 handle. The sterling is again, another great story here. Look at the sterling. It's challenged now. It's trading above. Remember, at the beginning of the day, we were keeping that close eye on 121.092. It's now at 122.64, above the 200-day moving average. A complete turnaround once again. And like I say, just in September, what a move in the FX markets. Dollar yen, like I said, it's hit lowest level since August. Okay, we still got that key area, potential area for me, potential area of interest, 134.91. But we are, challenging that 38.2 Fibonacci retracement ratio. So again, like I say, trading around the August lows. Gold, of course. Guess what? Gold, until the ISM, is still there, though. Challenged. Absolutely challenged that key area I've been talking about and looking out. Area of interest, $1,803.50. Challenged it, couldn't quite break it. It's trying to recover again now to give it another go. Currently trading at $1,798. Gold is really benefiting from the weaker dollar. It really, really, really is. It's having a nice time to shine. Again, like I say, if we look back on the September lows. It hasn't had such a straight, recovery, or reasonably straight upward recovery like the sterling or the euro. It's still been pretty range bound for a while, but obviously it's now, it's trying to get back on that with the dollar weakness. So again, it is really, really, really benefiting as well. So that is an interesting Bitcoin. Again, we can see risk appetite has returned to the market. Yes, we dropped under 17,000 now, but it's still close to the 17,000 mark. Don't forget, Bitcoin has been under a lot of pressure, mainly down to obviously the crypto crisis, which we've had a lot about, or a lot of headlines of the crypto crisis over the last couple of weeks. But it's changes in the 1700 mark at the moment. So yeah, we have got risk appetite on there. Right. So what else? So we got more data to come, obviously, which could really change. And like I said, at the moment, there's clearly, apart from obviously the knee-jerk reaction from the ISM manufacturing PMI and the factory orders, in general, the bulls are being dominating the market. Of course, we've got key information still to come. Okay. And that starts tomorrow, obviously, which is the non-farm payroll, obviously. Now, it is expected to come in lower than anticipated, a lower reading for the first time in many, 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 many months. Expectations for 200,000. Previous reading was 261,000. Are we going to see finally a slowdown in the labor market? Initial claims today came in slightly better than anticipated, 225,000 new initial claims versus 234,000 expected. So are we going to see a labor market cool? Don't forget the ADP came in lower than anticipated on yesterday. Not that I see the connection between the NFP and the ADP anyway, but still, are we going to see it? But this could potentially be a big event, a very big event. Don't forget, I will be doing a watch along for this because it's it's a big event. I do love watch alongs. I'll be going on air 10 minutes before the event, so we can have a quick chat about it, go over some scenarios, and then more importantly, watch the live event as it unfolds. Market as it currently stands at the moment. As we say, we're having a bit of a sell-off at the moment because of the ISM. S&P negative 0.55%. NASDAQ down negative 0.67%, and Dow 30 down negative 1.10%. But in general, there is a bit of optimism in the market with the idea that Powell's changed his stance. Maybe his wording was slightly different, but he said the same thing. Just maybe he didn't come across as aggressive, but still he said the same thing. And he didn't say anything which would surprise us. We sort of anticipated they're going to do 50 in December. The fact that he just admitted that they're going to start looking at doing smaller rate hikes, again, there's no surprises with us on that. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or show me your opinion. What do you think? Do you think this is definitely a bull market now? The currencies at the moment, for the time being, definitely, I think we've got a bit of a bull run on the currencies at the moment. I'm worried about the sterling, though, because obviously there's more and more UK data coming in, which is looking negative. For example, house prices dropped to its lowest level in 2 years in the UK today. Plus the cost of living since the Brexit is, for household goods or food, it's gone up about 6%, they reckon. An extra £210 a month on food costs. So I'm going to watch the sterling, even though the sterling is recovering and enjoying its recovery. Let us have its little time at the moment. But I think in the future, we'll see a little bit more economic data coming out, which might damage it. But for now, we've got a bull market. Well, a bullish, not bull market. I'm not convinced we're out of the woods yet. But we have got the bulls pretty much making their mark on the market for now. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow at 9:30 a.m. at UTC to discuss the European session. Plus, of course, tomorrow for the NFP watch along at 1:20 p.m. UTC. So please come and join me for that. If there's no more questions, not a problem. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching us on YouTube, you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time we're going live. If you enjoyed this video, found it interesting, useful, and you put up with me, then give me one of these. It's nice to know that you like what I do. I see I've got a couple of little likes at the moment, which I really appreciate. I really do. Anyway, Anyway, till next time, don't forget, these little videos are for educational purposes only. And in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.